can have a win, you can have a loss on the same day. Today I'm gonna explain how I took first a very small loss and then I took a win. Let's go into it. I'm gonna first explain the W because that was on Zen. And Zen, I already traded it before and that was one of my best trade last month. And right now I'm having a very nice trade as well with a very nice entry. You can see here the proof. And in the compound private Discord, link is in the bio, I shared this chart and I shared Zen. I wanted to accumulate right here and break structure and go higher and then potentially distribute right here and go lower. So that was the plan, and that I'm gonna go over it because let's go back in time and let's go trade it like a real trade. Because right now, what are you seeing here? You're already seeing a range from high to low with one deviation on the upside. And the deviation is leaving behind 30 minutes supply, heavy supply, and is leaving behind supply right there as well. This is your first move up after the tap 2, which makes that extreme liquidity, as you all know. And right now you're forming a range right here. And structure was going lower from tap 2 and was making a lower highs and lower lows. So what am I gonna do? I'm gonna draw my range from low to high because we're in a local downtrend, and now I'm gonna watch for potential distribution right here or a potential accumulation right here. Okay, so I'm gonna watch for either one. And what happened right here, because when I go on the lower time frame, you can see we are contracting in a range. So you did saw this price action and you saw this price action and you saw, hey, or we have a move up right here, or we have a quick move down right here, but we were contracting, so we were going down. So what do you know when you leave this, you go down and you leave the highs intact, is that you have a good return to zone, because all these highs are not taken out by the other ones. So you left those highs and right now you made it first deviation. So you have your first deviation. This is your tap 1, this is your tap 1, okay, range low, range high. This is going to be your tap 2 of the range. And right now we're going to watch for potential tap 3 to trade it and to target a range high, of course. And right here, something very interesting happened because, of course, the POIs were this liquidity point. If you want to know how I get those liquidity points, watch all of my videos and you get it. And of course, this structure demand, structure was going like this, boom, structure was going like this, leaving behind an inefficiency, an amazing level. So now I'm going to watch for my tap 3 POI. And tap 3 POI, you didn't have any last candle going down before going up, leaving an inefficiency. This is an inside candle, so that's not valid. And you didn't have any extreme demand. So what's your extreme liquidity going to be? Your first move down before going up. So this is going to be your extreme liquidity. But as you can see, while we were going down, there was no structure to break while grabbing this extreme liquidity. So you need to break structure between tap 2 and tap 3 to confirm a rotation towards the range high. But there was no structure to break. So what did we do? We deviated tap 2. And when we deviate tap 2, we can extend our range. And we can see we have our tap 1, we have our tap 2, and now we have our potential tap 3. But the time displacement is off. So the taps were very quick after each other. So the time displacement of this was only 2 hours 20 minutes, and the time displacement of this range was a 20 hour. So that's what you want to take in consideration while taking the trade. But technically it's still valid to trade a trade which has not good time displacement between tap 2 and 3. The only thing is you need a very good return to zone and context to trade it. And right now context was saying we can go lower to mitigate that demand and to grab the liquidity, but you already have a potential model right here because we deviated that tap 2. And the return to zone is absolutely amazing. The volume profile was a bit high up in the range, but you see it was an amazing range. You had at the equilibrium of the range, you have the volume profile, and the majority of the volume was in the lower section of the range. Which means when you have the majority of the volume in the lower section of the range, the upper section of the range doesn't have volume to hold price down, and this can squeeze up. So when you have the context in check, when you're half deviated the tab 2, you can see that this is going to be your structure break, because structure was making here lower highs, lower lows, and you see boom, that's your last market structure. So this is going to be your structure to break, and right here you have supply above the break. So this is the most refined supply, and right now, because it was not in the volume profile, it was very close to each other. I was very cautious with entering this because you had a wick right here and you had a wick right there. So I was not an entry. You didn't break structure yet. You have no candle body close above that structure break. So you don't have a structure break. So what am I gonna wait for a good structure break? And you see here price going up, and you see here price indeed breaking structure. So that was in the end my entry. You see you wicked it here again, and right here you see eventually price breaking structure. So that was the structure break, and right now my stop goes below the low, and because I see supply goes failing, so I enter and my stop goes below the low, and I enter I target the range high, and my entry was a bit higher. So my entry was like here or so. So I target the range high, my stop goes below the low. What do I have in mind? I still have in mind that price can go lower, okay? This is not a 2% risk setup. You need to know when to be risk on, risk off. One, I'm playing with profits because I made insane amount of profit last week. And two, I know when this fails and price goes lower, I will just take the trade again and then make my win. Because I know the context, I know this wants to accumulate. It looks insane accumulative, and I also even shared it on my Twitter, not only in the Compound private Discord, but also on my X, because this was such a clean pre-planning. And what happened right here is that we indeed broke structure, and when you see price was indeed going up, you stick to your plan, and right now price is indeed going up and taking its time right there. So that was this trade for a potential 3.6 RR, amazing RR trade. I was saying this can still go lower, guys, when price was here. To indeed form a model 1, is that fine? Yes. Because you weren't risk on right here, you're not risking 2 or 3%, okay? This is just a normal trade, which was the pre-planning was amazing. The break of structure here was, in the end, pretty aggressive. It was just a clean model, leaving amazing liquidity behind. So that was the reason I took the trade. Let's now go over to the loss, because I took a small loss on ZEC. And on the ZEC chart, I've already made a video about this yesterday, I think, or the day before, but you had this PO3 schematic. If you have not seen the video yet, watch it. You had a PO3 schematic with a range right here, and you had your manipulation phase right there. But out of this manipulation phase came something very interesting, and I even talked about this in the last video, guys. Market maker supply. Because when do we have market maker supply? Again, after a PO3 or after a Wyckoff schematic. And right here, I wanted to trade price going up here. I even shared it in the Compound private Discord in the morning video, in the private morning video as well. I wanted to trade a distribution in that supply. And you have those refined supply POIs. And we came into the first refined supply POI. And right there, when I go back in time, I wanted to trade this like a trade, because you come into your 1, 2, 3. You have your 1, 2, 3, and I wanted to trade price going into it and break structure and target all those lows below. Because do you see all those lows below? This is all liquidity, guys. So in order to trade this, you need a market structure break. We of course didn't have a market structure break right there. This was in the middle of the night, but when you do your supply tool in a more refined supply, you can see price was going higher, and you can see price eventually going up right there. And when I go back in time, you can see where I entered the trade, because we didn't have a structure break. And I told you all in my channel in the Compound that this was looking very distributive, okay? And right now you have your 1, your 2, and your 3, but this isn't even clear price action on a low time frame. On a higher time frame, you can validate it. which were 1, 2, 3, but I was just watching it like exhaustion. Price was wicking the high, wicking the high, wicking the high, wicking the high. So I wanted to come into this supply and eventually break structure. And what happened right here was that you indeed went up. So you had your 3-minute structure break. It was even better than a 5-minute. So you had your structure break right there. Yes, it was a break. No, it was not a convincing break, guys. Not at all. It was not at all a convincing break. So you had this. I had 1/3 of my position already in. So I took this trade. I targeted all the way to the range high, the range low, and price just fucked around right there and went higher. That was literally a trade. So was this a valid trade? Yes, it was valid. What was the best thing to do? To completely wait for this 10-minute structure break, because structure was going up, boom, and like this was a 10-minute structure. Break this and you confirm your rotation all the way to this low. Okay, so if that structure, the 10-minute structure was breaking, you confirmed your rotation all the way to the range low. If this had a convincing break as well, which it absolutely didn't, because right here you had a wick, right here you had a wick, price was wicking the lows, so you never had a convincing body candle close below the breakup structure. You just didn't have it. So that was the reason I only entered it with 1/3 of my risk and got stopped out right there. Totally fine. I'm happy with it. I'm glad I took the trade, because it was nice to have some exposure for it to go lower. But as I said, low risk, and right now we are deviating the high again, and we can do some new TA. So that was the video, guys. Link is in the bio of the compound. Hope you learned something new today, and see you on the next one. Ciao, ciao.